Hey everybody, what's going on? It's Randy Wolfe. Thanks for joining today. So, I'm talking about real estate investment strategies today. There are a ton of different types of real estate investing strategies. Some work well, some, depending on the market and what's going on with the economy, are a little bit different. Right now, we see that the interest rates are higher than they were, let's say, in like 2020, right? And so when you look at that, all of that kind of starts to tie into what's working, particularly at this moment in time. I think if you look, first of all, when it comes to just a general big high level overview, you've got buy and hold, which is a great way to build wealth. So if you buy and hold, you can literally buy single family homes, you can buy mobile homes, you can buy small multifamily, you can buy medium to large multifamily, but basically it's just what it sounds like. You buy a property or a group of properties and you hold them for a period of time. And typically those properties will have a tenant in place. And that tenant, depending on if it's commercial or single family, will be someone that either lives in the property or uses the property to operate their business. This is a great way to build wealth, to save you on taxes. There's a tons of tax benefits with this. And one of the things that when you go about it this way is if you're doing it with single family, it can take some time for it to really kind of compound. When you think about it, and I know a lot of people that I'm friends with have gotten started in real estate, or even some of my students and people that I work with to help. Basically, the idea of putting all this work in and then you're only getting like $200 to $300 a month in cash flow is not really game changing. It's not something that you're like, oh, well, I can do that and then just kick my feet up and retire and leave my job and that sort of thing. Because let's face it, typically you're going to need a lot more to live on. But what I will say is a great strategy that you can use is you can do something that's going to bring you in active income while doing the whole buy and hold strategy to build wealth. So that's the first thing is if you look at, for example, in many states, you can still do what's called wholesaling. I have videos on this channel. I won't dive into that, but just check out some of my videos on wholesaling. But wholesaling is a great, inexpensive way to get started. Now, the flip side of that is it's probably one of the hardest things in the sense that you have to get these deals at the absolute deepest discount because you've got to have enough margin in there to where a flipper or somebody or a buy and hold guy is going to want to come in and buy that deal. But it can be a great way to get started. You can make what's called an assignment fee. And in essence, that can range anywhere from say $5,000 to on average, 15,000. Somewhere typically in the middle is where it lands. Yes, you can make a whole lot more in assignment fees, or I've actually in the past when wholesaling was something here that was okay in South Carolina, I've had situations where I bought a property and then the wholesaler makes, $2 or $3 grand because they just weren't able to move it. And I come in and buy it and it's like, okay, no big deal. And then there's been situations where people make, 30, 40, 50,000 on an assignment. So it's something that you can do there. Also fix and flip. If you have a job, that can be kind of difficult, but fixing and flipping, a lot of times you can get a lot higher returns on that, but it's much more higher risk involved with that as well. But fix and flip is something that you can do. That's another strategy. But at the end of the day, the sweet spot is being able to have active income coming in and then being able to use part of that active income to buy and hold assets. One thing that you can actually do is you can actually continue to work your 9 to 5 job. If you have a high paying job, maybe even if you aren't crazy about your job, don't just necessarily quit your job and just jump in head first with this. I think, and some people will have a differing opinion than me on this, but I think it's a good idea to keep your job, continue to have the income coming in from the job, and then really use a big portion of that income to kickstart your real estate investing. And so you can use that income as a down payment to buy rental properties. You can use that income in order to fund a marketing campaign so that you can wholesale, or, even in situations if you're going to fix and flip, as long as you have a really good solid team of contractors and, you have people that you can kind of rely on that can kind of mentor you, that sort of thing, you can even fix and flip and still have a job. It's hard. It's not easy. It's hard, but if you go and you do fix and flip, and let's say that you flip 3 properties in your first year, and each one of those properties you end up making $30,000, which again for a flip is really not that's not crazy. Then, you make $90,000 net. So you got to pay taxes on that. But, then you ask yourself, okay, is that something to where out of those $90,000, could I take a portion of that and use that as a down payment on a rental property? And I would say if you do it right, you could, and then you could continue to do that and grow that way. It's not something where investing in real estate is a get rich quick typically kind of thing. It's a steady growth in your wealth over time. And so those are some strategies that you can use. Basically, buy and hold is going to be your strategy for building wealth. Fix and flip, wholesaling, that is going to be a strategy that you can use more for today money. Now, when it comes to buy and hold, there are several strategies within that strategy. So first of all, let's talk about single family for just a second. Single family properties. You can buy a property, fix it up, furnish it, and then you can do what's called a short-term rental. So for many of you out there watching this video, you're familiar with like Airbnb or a vacation by owner. Is it vacation by owner? Anyway, let's just use Airbnb, for example, because that's the one I'm pretty familiar with. You can use Airbnb, and you can actually lease your property for several nights or one night at a time. And that business, typically, you're going to, because it's going to be furnished, and if you buy in the right area, you can get a lot higher cash flow from that, but it's going to be much more labor intensive. You're going to also run into situations to where if you buy in the wrong area, that can be a problem. You've got to have a good, strong short-term rental in order to do that in a good, strong, demanding market. It used to be you could just buy something and slap some cheap furniture in there and it worked. Then it got really oversaturated, and now it's a lot harder than it used to be. But it's still something that you can do. You got to be careful about municipalities and rules and regulations. One that I really like is kind of a hybrid between a short-term rental and a long-term rental is midterm rentals. So this is like when you can have a property and you rent that out to like traveling nurses or people of that, that sort of thing that are going to be there typically, anywhere from, 30 to 180 days, that sort of thing. And midterm rentals are great. I've got one with a partner, and we typically keep that leased up with nurses because it's relatively close to a hospital. And then finally, you've got long term, which is the most traditional type, which is where people they have a lease for 6 months to a year or more, and they stay in your home and they pay you month to month on the rent. So those are kind of like within the subcategories of single family. Then of course you have multifamily and small multifamily. You get into commercial, now we're talking like apartment complexes, smaller. If it's below 5 units, it's typically kind of still considered single family. But if you get above 5 units, that's where it typically kind of goes into multifamily property investing. And then of course from there it can be small multifamily, like let's say 10 units, and get all the way up to large multifamily properties where you got anywhere from 200, 400 unit apartment complex. And then the last thing, and I'll close because I'm going over time here a little bit, is the commercial properties. These are things like where a business would lease. So we're talking about like industrial. We're talking about businesses that operate. You might have a property that you lease, a strip mall, or it could be literally one building, and maybe that's on like a triple net lease where they're paying all expenses, taxes, insurance, that sort of thing. Typically, when you do that, you're really looking at what's called cap rates, and you're looking at net operating income to try to value the properties. They're valued in a different way than single family properties are. I won't get into that on this video, but that's another strategy that obviously requires a lot more capital, but particularly if you get into a triple net, you're really not having to manage it very much at all because they're pretty much taking care of everything. So anyway, those are some real estate investment strategies for you. If you have questions, feel free to reach out to me. I have a private community. We're currently full, but you can check that out. I'll put the link in the description below. You can join the wait list for when we open that back up. And I also I'm just rolling out a 90-day coaching program as well. So if that's something that you're interested in, I'll try to put something in the description below for that as well. But as always, I appreciate you watching today. I look forward to seeing you on the next video.